Agentic AI is giving open finance a shot in the arm. On the other hand, in the US, Amazon is suing Perplexity for its agent crawling through and transacting on the Amazon website. What does this mean for open finance? Joining the JDB report to discuss this is Jessica Liu, co-founder of Planto, a Hong Kong-based fintech specializing in open finance services. Jessica Liu from Planto, welcome to the JDB report.
Thank you for having me, Jane.
Pleasure. We have an exciting topic, and you were the first person I thought of who I wanted to speak to about this, which is getting to the root of how open finance and agentic AI are going to work together or not, and try to get sort of a reality check on where we are with the introduction of agentic AI into open finance platforms. Uh, you are co-founder of Planto, which is sort of an open finance oriented fintech based in Hong Kong. So, before we get into some of the specifics, maybe you could just share a little bit about how you see the introduction of agentic AI into what's been an ongoing for, a decade or more now, issues around creating an open banking framework in different jurisdictions.
Mm. Yeah, thank you, James. So, just to give a little bit of a background from on what we do at Planto as well, which then links to the concept of the open finance and kind of the agentic AI intersection. At Planto, what we actually do is we build use cases for different financial institutions or TPPs around open finance and the application of AI. So our clients include, let's say, banks like Citibank and Shanghai Commercial Banks, TPPs, or potentially open finance license holders, depending on which jurisdictions you're in. And we cover things like, financial management for consumers, corporates, and also customer intelligence, conversational banking. So a lot of our solutions kind of does involve the use of open finance data, as well as, let's say, the technologies, AI technologies, or AI agents, especially when the conversational banking piece. So we see a lot of potential in this space. Obviously, with open finance and AI, what's happening is that key players in the market, whether that's financial institutions or even, let's say, TPPs or platforms, are trying to leverage this accessibility of data via open finance frameworks or open data frameworks to essentially, execute on different things. Such as helping consumers, let's say, make payments, do account sweepings, rebalancing portfolios, or for corporates, you have trade and treasury management as well. And the idea here is that a lot of banks have been applying AI agents. I think in Hong Kong, it's still relatively kind of early in a sense that most agents are being applied in-house,
Okay.
because that is the most, let's say, uh, secure way of doing things because Hong Kong is taking more of a, I would say, traditionally Hong Kong financial institutions have been quite conservative, so they're taking the more of the kind of staff-facing approach when it comes down to AI agents. So you have, let's say credit assessment processes, or let's say AML or fraud detections and so forth. But we're seeing like a growing kind of use of agents in, let's say, other jurisdictions like the US, EU as well, where there are banks who are using this with their clients via, let's say, treasury management, via the use of APIs. I would say that there is a lot of hype around this. The real applications of AI agent, it's still at its early stages because there's all these concerns around um, how trustworthy they are, the issues around general AI, around, let's say, the biases that exist, hallucinations, the idea of how do you actually have more human oversight when it comes down to, let's say, having customer-facing applications as well. But I think with more, regulators involved, this will definitely change, and they will have to be involved. It will have to be a more regulated space which needs to have a strong framework that is well defined, because there will always be, let's say, market players or let's say even malicious
Hmm,
players who would try to leverage on this to for their own gain.
sure. What are the differences in a world that is API connected, which to me sounds very bilateral,
Hmm.
versus an agent, which in theory has the ability on behalf of its operator or owner to go connect or engage with a multiplicity of platforms.
Yeah, so I mean, there is a difference there in terms of APIs are definitely usually more well defined, and in a more, let's say, regulated space or in a space where, let's say, platform providers are there to kind of define these APIs, it's more controlled in that sense. But in for agents, it's basically executing on what the user is demanding or requiring it to do. So it involves MCP and so forth, which is sometimes not entirely controllable from the platform's perspective, I would
Right.
say.
And just to define MPC for us,
Oh, so MCP is basically,
MCP,
um,
sorry.
yeah, no worries. In the AI space, MCP is basically a framework in which the it's the full term is Model Context Protocol. So it's basically a standard developed by Anthropic, and it's the idea that AI models can connect to different applications or external data sources to basically have more context around, how things are executed. So these are, how large language models like ChatGPT or Gemini can then securely access, interact with different tools, such
Right.
as things like database files and so forth, and APIs.
And who
Yeah.
chooses if a model like that is going to access their own data or their own services online?
I mean, this really depends on the user. It should theoretically depend on the user themselves in terms of what kind of, let's say, use cases that they're applying for. So, for example, let's say they dictate what kind of files to access, what kind of databases to access, and essentially what kind of models to use, whether that's, Claude or whether that's ChatGPT for its general application.
And if a user wants to use any of those, whichever one, to go execute something, is a financial institution or a payments platform or a fintech, um, do they have any choice over whether or not that agent comes into their world and on what basis?
Yeah, so I think right now, because it's not so regulated, the framework is not so well defined. These things have to be done by, let's say, the financial institutions or the platform's own discretion. So,
Mhm.
for example, financial institutions, they might have a bot management or some sort of management technical framework that helps detections of these kind of usages. But let's say in the case of Amazon, where Comet does this on behalf of the user based on, what they want to achieve. So in this case, is make purchases on behalf of the user, which they call agentic commerce, and
Right.
then browsing it like they do, similar to what a human does, and taking action based on that.
Right. So Comet is an agentic AI tool of Perplexity, an LLM,
Yeah,
and there's a lawsuit between Perplexity and Amazon over whether or not Comet can access on behalf of users Amazon's tools. Amazon, I believe, says this is a breach of its no bot
terms of service.
terms
Yeah,
of service. But um, that leads to interesting questions, though, of obviously that's an ongoing lawsuit, so we don't know how that will be resolved. But in the world of commerce, there's this question mark over whether an agent is basically just seen as a malicious bot, or if it has to be recognized as operating on behalf of someone. And then, if that is the case, how does that work? So, if we maybe take that back a step to the world of open finance, let's say payments, for example, is clearly an area where e-commerce and finance will overlap. So, do you have any way to help us maybe think about the implications for the disagreement between Amazon and Perplexity? And if that has, if you think that will be something significant for different parts of the open finance system to pay attention to, or will it really remain just in the world of e-commerce and doesn't matter?
No, I think for sure there is definitely implications around this for open finance. I mean, the case of let's say Comment and also of Amazon,
Mhm.
the key thing here is that Comment made this kind of idea, the AI agents, very accessible for the masses, right?
Right.
Initially, it was a paid platform. Now it's a platform that is made free. And, Amazon says, okay, this violates their terms of services, but in reality, the reason why they're taking this action is because it's a threat to their business model. The ad revenue was 1.7 billion for them alone in Q3. So they are trying to use this. It's triggering them because of this reasons, right? And this
Right. And
is the
so it
thing,
goes back to the reason they worry about it is because the the Comet model cuts through whatever is being advertised. So people are advertising on Amazon to get preferential visibility of their products,
correct?
but
Yeah.
but the AI ignores all of that and just says, "Oh, this is the best price," or "This is the best fit."
Exactly, because the AI is executing on, the goal in which the user, the end user wants to achieve, right? Typical users wouldn't want to go through ads. They just want for them to go through the list of items, which one is the cheapest, do the comparison, and then pick that product for them. And I think this is definitely the case for open finance as well. I mean, we've seen that though AI agents was not prevalent in the previous years, let's say 10 years ago, but we've seen the rise of, let's say, use of scraping and so
Mhm.
forth because there are platforms that are acting on behalf of end consumers who are helping them manage their finances and so forth. And the idea of AI agents making this a lot easier and a lot accessible with and a lot smarter as well we'll see a rise in terms of its application, especially when the tools to build AI agents are becoming more accessible and easy to use. And I think that's the reason why we've seen, although there isn't a full framework around AI agents and open finance as a combination, but you have seen in Europe and in the US there have been growing frameworks around how to, the ethical aspects of the use of AIs in general, which then touches on AI agents as well. And it's an ongoing kind of development as the market sees more use cases around the usage of AI agents.
A canary in the coal mine or some sort of bellwether for where this might head could therefore be, say, financial comparison websites,
Yes.
which would have been initially built on scraping, and then they would then try to lead to more of an API-enabled framework with the banks having buy-in to, marketing their products on a neutral, independent sales site. But I guess in theory, an LLM model could completely bypass that.
Yes, for sure.
What else is at stake here? What are some of the other models or potential winners as well as possible losers if agentic AI begins to pick up steam and we start to see real meaningful use
Mm.
of it?
I mean, I think when we look at open finance and we look at the core of it, right? Most jurisdictions would say that it's about, the consumer, it's about promoting innovation, and it's about, let's say, promoting competition.
Yeah.
I mean, I think, a lot of, let's say, platforms like Amazon or even financial institutions who are the ones who provide this data they would always be in, defensive about the idea of open finance, right? Because the idea of their data being used for other applications, it just doesn't, it's a threat to them. It's a threat of their existing kind of revenue model. But personally, I think that if you have a robust framework that essentially, you have regulators who are involved in which their agenda is to focus on what consumers want, and being overseeing that development of whether that's consent or whether that's the infrastructure, the data exchange, what is the scope of how AI agents can be used. This can definitely, bring in new revenue models for, platform providers or data
Right.
providers, and encourage them, to take that step because eventually, people will be using this technology, and if it stays in the gray area, it won't be good for, let's say, platforms like Amazon or financial institutions because they have to build guardrails around protecting their own data for unauthorized use. But instead of investing in that, you might as well make it more legitimate and then work towards, let's say, more innovative models that benefits their business model, but also can and consumers as well.
And also build it so it's safer. But
Yes.
at what stage of the conversation do you feel that banks or other players in this space are when it comes to cybersecurity issues related to agentic AI? I mean, I can with with traditional open finance, the old days of open banking, one of the legitimate concerns that banks had was that if there's any kind of breach, they were going to be the ones on the hook,
Mm,
either in terms of reputation
liability.
or
Yeah.
liability. Um, what happens with agentic AI? Who could potentially be on the hook if either an agent does something wrong, or
Mm.
if the agent isn't in fact not representing a legitimate person, but is actually some sort of malicious bot?
Yeah. So I think this is definitely a very debated topic in general. I mean, you can see AI agents as typically any kind of technology as well. Like if, let's say, there is a bug or if there's issues, it should always be held by whoever had made that kind of mistake. So in a sense, when it comes down to when we talked about liability management, it should be focused on identifying what potential errors or breaches can happen. Either that's via, let's say, from different parties or the AI agents themselves, and what kind of harms that can actually, result in, let's say, use and customers losing money or data being breached and so forth. So these kind of things, and that's why regulators being involved is so important, is because it needs to be well defined in what scenarios, these who takes on this responsibility. And essentially, when it happens, then each party should have some sort of, let's say, insurance or some sort of related compensation mechanism to then compensate the end customers. But obviously, when it comes down to customers who don't go through a platform, who basically do it themselves, I would assume that, financial institutions or any other stakeholders would uh, say this is the responsibility of the end users who built this technology themselves, who didn't go through the legitimate route of using AI agents and so forth. So I think it doesn't really matter whether it's the use of AI agents. The same philosophy still applies to the fact that, okay, you allocate the responsibility to that the person or the company that essentially caused this harm to the end user.
If I'm interpreting this right from you, Jessica, you're kind of saying we need to have a regulatory roadmap to have meaningful advancements with using AI agents in open finance. Is that
Yes.
are you basically in that
Yes.
chicken versus egg question? You're saying it's the one that has to go first and take the lead will be the regulators,
I think theoretically that should be the best way to go, but in reality, it always starts to, more market driven
right?
because regulators need to observe the market. They need to see what are the strong use cases, what are the legitimate use cases when it comes down to applying AI agents, and in this case, under the open finance framework. And then build around the scope of what AI agents can do, what kind of models can be involved, what platforms needs to have the related licenses in order to actually use this. And we've seen this, in different markets, like this philosophy. We've seen that, let's say, markets that have actually strong regulatory intervention to be a lot more faster, more efficient when it comes down to applying open finance. Markets that have been very wishy-washy, gray area in terms of how they manage open finance or open banking has been relatively slow. And you still have people who, they won't enact on the fact that you cannot use scrapers. But those who have regulatory involvement, they have been very black and white around how scraping is prohibited, which then, protects the end consumer as well. So, but yeah, just taking a step back, sorry, here I would say is that we'll have to start with being market driven, with the learnings from the market, and then with regulators and different stakeholders in the market, knowing what are the use cases, and then building an ecosystem around that.
So who's incentivized to make these things to make these happen? In open banking, the banks were not the ones that were keen on openness. It usually had to come from a regulatory, like a competition law or something that kind of
Mm,
forced them. And then for many of them, for at least initially, it was a box ticking compliance exercise. Their heart wasn't really
yes.
in it because they didn't see the use case. I believe we're now turning a corner in some of the markets where these are becoming valuable parts of a banking offer. But it took a long time, and nobody really stepped up voluntarily. So when it comes to
Mm,
AI, agentic AI, we hear bankers talking about it a lot. Everybody's talking about it a lot.
yeah.
But who actually has the incentive to sort of make things go first?
Mm. No, I think it's always going to be the TPPs who
The
will
third
have
party
this incentive,
providers.
third-party providers. Um, that is the only way which will drive, let's say, financial institutions to get involved and become innovative themselves. I mean, what we've seen worked very well is, and as an example, is in the UAE, where they issue open finance licenses, and the threshold for TPPs is pretty low. You don't, you just, you fill in some applications, you have a minimum kind of capital requirement as well, just in case there's any liabilities involved. But essentially, they're inviting more players in the market to get involved, which then, has ignited, let's say, the financial institutions in UAE to get involved as well. So it would have to be a mix of having regulators, being regulators involved, but being open to, let's say, having TPPs to drive this innovation, to drive the different types of use cases. And the other thing is the data that is being involved as well. I mean, even with, let's say, agents, it wouldn't work well in an open finance regime that has limited data scope. It would work well if you cover, let's say, all types of asset liabilities, you payment initiation, and so forth. That's where it thrives. So that would be the roadmap or approach that would really incentivize all stakeholders in the market
Yeah.
to be more involved and build towards that.
That also implies that, at least initially, this would work better in a purely domestic context. It sounds like cross-border might be
Yes.
quite difficult.
Oh, for sure. I mean, even in a domestic context, building that infrastructure, the interoperability between different financial institutions, different TTPs, that takes time as well. To do it on a global scale, there is attempts, there are initiatives, such as Project Aperta, that is being done between different cross-border collaborations as well. But it takes a lot of time, and to be able to do it domestically and prove it domestically first, is more important to set an example for global adoption as well.
Great. Before we wind up, you want to tell us a little bit more about what you're seeing at Planto? Where are you finding it's possible to move the needle?
Oh, thank you. Thanks for that. So at Planto, what we're doing is, like I mentioned before, we build use cases. What we're seeing that's interesting right now is because, like you've mentioned, James, a lot of banks are interested in kind of the open, kind of the use of agentic AI. And in Hong Kong, they have been adopting kind of the IDS, the kind of CDI framework, where banks can get more access to different source of data, whether that's for SMEs or end customers. And the
This is,
idea of
just
conversational,
for people outside of Hong Kong, this is sort of a group of banks, kind of a bank-only club overseen by the
yes,
regulator that are doing data sharing amongst themselves. Is that correct?
yes, that's correct. But CDI is basically an initiative that has kind of external data access for these banks. So, for example, in SMEs, let's say their trade data or their credit data or their payments data from, let's say, POS system is something that banks can get access to as well. For IDS, it's more of like bank-to-bank data, kind of their CASA account data and so forth. What we're really seeing is that with these access to data, or the breadth of data, that banks are starting to see the potential of building AI agents, because historically, using your own data to build this without a clear 360 view of your client's profile, it's tough. You only get just a few percentage of it, and especially tough for smaller banks as well. But we're seeing like there's huge interest in conversational banking. Obviously, the potential there is beyond just the typical chatbot that we see in the market there with the use of, let's say, more personalized data. And we're also seeing, for example, the use of, let's say, the open finance framework for customer intelligence for more the real kind of potential of hyper personalization. But I think, James, what's really interesting is not only domestically in Hong Kong, but what's happening globally. I think the topic of AI has reignited the excitement around open finance and open banking because of the potential of what can be used there, but obviously the also regulatory concerns, the ethical concerns of it too. So you've seen markets like I've mentioned before, UAE, Europe, and the US, where there's a growing application of AI, and we're excited for that, and we're also looking into similar markets in the Middle East, because of kind of the framework they have in place, that is very welcoming to TPPs.
Great. Last question is where what you described a moment ago, Jessica, sounds a lot like sort of the old portfolio finance systems, which were sort of the initial use case for open banking, right? It was so that
Hmm.
somebody could get a holistic view of because they have multiple bank accounts or multiple product accounts, and somebody wanted to be able to provide usually a third party fintech of some sort wanted to give them that holistic view so they could come up with a portfolio strategy or something like that.
Yes. Yeah.
Um, so it sounded sort of like building something like that, smarter, better, but this time with the banks a little more involved directly rather than just being passively scraped. Uh,
Mm.
are they enthusiastic about being able to create something where there's a portfolio that would involve them only being a part of that? Their other competitors would also be sharing that data. Um, who stands the consumer obviously I think is a
Mm.
beneficiary of this, but from the from a financial institution's point of view, how are they going to turn this into revenue?
Yeah, no, for sure. I think for financial, I mean, if we look at the kind of landscape, especially domestically, what you mentioned about portfolio, which is wealth, which is, investments, this is the kind of the pie that everybody's trying to grow in
Mhm.
Hong Kong. And what we've seen is we've talked to a lot of banks here, and what excites them most is the potential of, let's say, sharing wealth data, investment data across banks, because this is where they can get a lot more intelligence around, what are the opportunities of cross-selling their wealth products to other customers, or understanding, let's say, if customers are really optimizing on their growing their wealth based on their financial profile. I think this is what is key. Wealth data is not, or more specifically, investment data is not within the scope at this point that is being launched in the market, but it is definitely something that is a priority for a lot of financial institutions we've talked to. And we've even had MPF companies mentioning how this will be a very interesting angle. I mean, Hong Kong right now is mainly just banks, but we have seen interest from the insurance side, the MPF side, who have said that, having this access to data would be very helpful for them. And it's not only just helpful for them, but it makes them, it will drive, let's say, the regulators' initiatives around the use of AI as well, because these insurance companies or these MPF companies will have more data around their customers to, encourage them to then adopt more AI application, which is what Hong Kong is trying to encourage the ecosystem to do.
Right, MPF being mandatory provident fund, so it's the
Yeah.
government retirement scheme. um, that suggests then that services, financial services, will be less about just having a supermarket, a product, or even a traditional relationship manager, and more about the way that you compose these different building blocks of data to create more tailored services
Yes.
and ideas. So it's going to be around portfolio construction and things like this that will be a little more tailored to individual needs. And so that will be the new battleground.
Yes, for sure.
Okay,
Not
well,
just for banks, but
not just
for
for banks, yes.
yeah.
Okay, well, I mean, I think that sounds pretty good. I'm on board with that as long as I don't get hacked in the process.
Yes. That's why it needs to be a regulatory push as well.
Yes,
Yeah.
to set up those guardrails. Jessica Liu from Planto, thank you so much for joining me on the JDB Report.
Thank you so much, James. It's a pleasure.